Today I want to talk about NVIDIA. It's on my buy list and it just is showing me some really cool signals, and I want to show you where I think it's going and how you can enter this trade. But I want you to enter this trade, if you're going to do this trade, after you do your research of course, I want you to do this for income, because I'm not sure we're going to get NVIDIA spiking up like it used to do. I think we're really going to get more of a chugging up, and that's perfect for an income stock. So let me show you what I'm talking about. So let's take a look at this chart here, and you can see that over the last couple of months, we've got a lot of choppiness with NVIDIA, right? It's actually been on a slight downtrend, right? For the last 2/3 of this chart, or the prior 2/3 of this chart. And now we're kind of looking like we're churning upward. And you could look all the way to the right side right here, and you can see that now it's kind of right above its 21-day moving average. It's got some other indicators that I really like that are showing that I think it's going to spike a little bit higher. I don't think it's going to spike quickly. I think it's going to kind of chug higher a couple bucks, maybe $3 or $4 a week. So here's how I'm looking at it. So I see that NVIDIA went down on that really nasty day where we went down like 1,000 points on the Dow, and we hit around the $90 level. And then we saw a spike off that, a beautiful hammer candle, which I always talk about. And by the way, what I try to do is I try to make about 2 to 4% a month. That's what we target. Now, a lot of times, like with a stock like NVIDIA, when I show you the covered calls, you're gonna be like, oh my God, this is amazing. You can overshoot the 2 to 4%, but on average, you're not always gonna get it. But if you can get it consistently, your account will build over time if you manage your risk. And so here we are at 90, and you can see it over the next 15 days or so, we spiked up to about 130, let's call it. So that's a 40-point move. Then we had a little correction going into our red market over the last couple of weeks. We're green now today, by the way. So that's why I'm looking at NVIDIA. It's a perfect time to delve into a stock that you like, and I like what they're doing in AI. And so this company came back down. The stock actually came down to around 100, and now I see it going to about 140 before it kind of stabilizes. So that's not a huge jump for NVIDIA. If you remember right, NVIDIA jumped from 500 or 50 post-split to 140. Well, right now it's at 117, and I think it could go to 140 again, and I think there's going to be some resistance there. But it's a perfect confluence of where I see this ABCD structure going, and I think the AB leg is this leg here from 90 to 130, that's a 40-point leg, and then we have another 40-point leg coming from this $100 level all the way to the 140. And if you look all the way to the left side of this chart, you could see that's the all-time high. So that's where I think it's going. What it does after that, I'm not sure. Now, how soon do I think it's going to 140? Heck, I don't know. I don't think it's going to go there in a day, even though the options are trading like it might. I think it's going to take its time and go over there for a couple of weeks up to that spot. And so what I'm looking to do, let me bring the options in, is I'm looking to buy the stock here, right? I already have a position, by the way, but I would say I'm going to add some to my position or buy some if you don't have any NVIDIA. Now is not a bad time to buy according to my probability study, but do your own research. This is not financial advice, this is education. And then what you're going to do is you're going to go out 30 days. So in 30 days, where do you think the stock will go? I think the stock is at least going to go to 120. It's at 117 now. This stock can be at 120 tomorrow morning. If it goes to 120 or even higher, I make the maximum amount on this trade, okay? What is the maximum amount on the trade? Well, let's talk about it. So we start off by buying the NVIDIA at 117.15, okay? At 117.15, and then what we're going to do is we could sell the at the monies or in the monies at $7.15 and pick up, $7 for a month, right? That's pretty darn good. That's showing us a 6% return for the month, right? That's what most CDs or bonds will pay in a whole year. This will pay that in a month. Annualized, you can see what it says there, about 72%. But I'm not going to do that because I have a green market. I'm bullish on the stock. It's showing me some indicators. I see that it may go to 140 after I do my analysis, and I don't have to take you through all that analysis. I'm just telling you that's where I see it going, but you can decide based on your analysis. And what I would do is maybe sell the 120s. I'm going to give you two options here. If you want to be conservative-ish, if you think the stock is going up, you sell the 120 strike price out for 30 days. The 120 strike price, let's look at the numbers. It's about a 7% return on your money. Annualized, it's about 89.21. What does that mean? That stock has to go up to 120 and expire with the option to over 120 for you to get that full amount. Well, that's not so bad if you get that full amount. It could go higher. It goes higher, you don't make any more money. That's the problem. But if you think the company is doing better than that, and you think it'll chug up even higher, I would look at these 128s. Now, you're only going to get $3, but on a stock that's trading at 117, that's a couple of percent, right? You get 2% for a month. That's still not bad. And if you look at what it looks like, so that's an 11% upside if it goes there, right? So if it goes up to 128, which of course we think is going to happen, we don't know, but we think that's going to happen in this trade. If it goes to 128, we end up pocketing not just the 297, that's the time value there. You see that time value in that time column. But we end up pocketing 1376 because it's got this increase from 117 all the way to 128. That's about an 11-point increase. Plus you pick up this $3 that you get when you sell the option. And so you see an annualized 142.47. So let's look at the numbers. If you buy the stock at, let's call it 117, and you turn around and you sell these for about $3, you're in this at a break even of 114. So the stock could still decline $3 and you haven't lost money. So that's a cool thing. And then if let's say we have $1 million account and we want to put, a decent sized position in NVIDIA, we want to buy 8,000 shares, we can do that and our income will be $24,000. You'll get the $3 per share in time value times 8,000 shares. So you'll make $24,000 in 30 days. You get that money no matter what, right? Even if the stock goes down, if the stock goes up, you're still going to make that $3. That is yours as long as you hold the option to term. Okay? The last part is if the stock goes up. Now remember, we're positioning the stock is going to be going to 140. Maybe it does, maybe it doesn't. But if it goes anywhere above 128, you end up making $13.70-ish. That's a $109,000 trade in 30 days. Now, you got to have the $1 million, but that's a pretty good trade. It's about 10.9% or something like that in just a very short period of time. It's 11.74% total. So, when you look at that kind of a return and you like an AI stock like NVIDIA and you think that you've got the bottom figured out and you think you've got the target figured out, then this is not a bad way to go. So I hope that helped you to establish a position in NVIDIA if it's right for you and if it's right for your portfolio. But you got to be able to handle the upsides and the downsides. This is a volatile stock and that's why it's paying so much on a covered call. Hope that helps. See you on the next video.